Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to get an update from US Critical Metals, and Darren Collins, the CEO, is here with us. Good morning to the US, Canada, wherever you are this today. How are you?
Well, here in the good country of Canada, and always a pleasure. Thank you so much for having us again.
Yeah, thank you very much. I'm a shareholder in the company. I want to disclose that first, of course, because I fully believe in rare earths. I believe in lithium. I believe in cobalt and all those beautiful metals we need for renewable energies, for new energy creation, and also for e-mobility. And of course, I like that you guys engaged Falcon drilling for Clayton Ridge. So finally, it starts with the lithium project.
That's right. So it's been a big effort of our technical team to get everything organized. We are, getting all set up on the property right now, anticipating the drill rig to be there about July 15th or so. And this will be the maiden drill program for the property. We have broadly disseminated lithium clay beds visible at surface, economic grade that we've sampled, and we believe the units are up to 200 meters thick. So good, well-defined targets that we're going to go in and put the drill to now.
Okay, super. So how many meters you are planning, and let's say what will be the major target of that?
So up to 2,000 meters, which may not sound a lot off the cuff, but the nice thing about these deposits is you really don't need a lot of drilling to start building a resource. So you look at other lithium clay companies within the area. NORAM, for example, is just one off the cuff. They did 3,500 meters of drilling to put together their initial resource and then actually start getting into a PEA. So these are very homogeneous type deposits. It's not like gold and silver, other commodities where you're chasing veins. These are basin style homogeneous deposits. So we can really advance quickly on a resource and then start looking at more development type work on this asset. So that's the idea. We do an initial pass of drilling here. There's 3 units across the property: the southern unit, central unit, and northern unit. We'll start off at the south. We'll work our way north, but the idea is again that we're quickly moving towards looking at resources and economics on this asset.
Okay, looking at resources, that is great. So, how much more do you think you need to drill to define a first resource? But just a feeling. I know it's a forward-looking statement, but do we need another, whatever, 10,000 meters, 20,000 meters? What's your feeling?
I think we start getting up to, somewhere around what NORAM drilled. Again, of course, widths and grades dependent. The drill will tell us, what we have in specific. But, I think maybe one more pass. And again, it depends on, maybe we do this initial pass and we start looking at a inferred resource and then refine that further from there. So obviously the drilling is going to give us a lot of information on what we can, target and plan in terms of, preparing a resource and presenting a resource to the market. But, I'd think that, this program should give us a very good start on that. And then if we have to come in and do some subsequent drilling to, further delineate what that resource is going to look like, that shouldn't be a lot more drilling on top of that. But I think we start getting up 3, 4, 5,000 meters, and we'll have plenty of core there to do a resource calculation.
Okay, super. Let's move from lithium to rare earth elements. You guys are also in Montana, where you have the Sheep Creek project, and it's quite interesting because I think China, was it like 2 days or one day ago, they said that they want to again restrict the exports of rare earth elements. So that might be something which was a little bit, to my understanding, out of the focus of the media now, coming back into it very fast. And how can you benefit out of that?
I believe the words are deja vu, because this is all reminiscent of what we saw the last time out of China this happened, which involved Japan back in about 2010, where the Chinese restricted rare earth supply to the Japanese, and then it was actually a process with the World Trade Organization, and ultimately China was found to be in contravention of various international policies and the like. But what they're actually doing here is restricting gallium and germanium, two very key rare earths, specifically in semiconductors, but also satellite technologies, mobile cellular technologies, and a whole variety of defense applications, radar, things like that. So, gallium in particular is of concern from the context of U.S. industry. The U.S. does not carry any stockpiles. It is 100% being imported from China. So that China really has the box on the U.S. here, for lack of better terminology. It creates quite an interesting situation for our Sheep Creek asset, where we have identified gallium as one of the rare earths present at the property. That is in addition to very high content of neodymium and praseodymium. But I think this really underscores the importance, and we've been talking about this for a while. I mean, you position yourself for what you expect to happen in the future with your investments. That's always the way that I've invested. You say, okay, where is the world going to go? Where are we now? And how do I position for that? We've been talking about this situation with China for a while now. And you almost hate to be right, but at the same time, we've positioned ourselves for what is this opportunity, and this opportunity is specifically domestic assets around a security supply, national security consideration, which is why we've positioned in the U.S., which is why we've positioned in the commodities we have. And that prophecy is becoming a reality and being underscored by the news that you're seeing out of China. I expect to see this continue. We see continued escalation and a boiling over of the situation between China and Taiwan. Obviously, big semiconductor considerations there. This is really a tipping point, in my opinion, for what is going to be a continued stream of news coming out of China as it relates to these commodities.
Absolutely. So, what would be the game plan for you? Because it looks like that Sheep Creek is getting more and more valuable in the view of all those news. What would be the exploration plan? So, what will you do to move really forward? And could you benefit also from the IRA?
So, a couple thoughts on Sheep Creek. So, the big one on Sheep Creek is going to be the permitting. It is Forest Service land. It requires a plan of operations. We've defined an area for initial drill targets. We have over 10 drill targets defined, really around, what are 3 historic adits. And those adits were historically niobium mines. Niobium used to strengthen stainless steel, but it's never been exploited for its rare earth potential. So we have about 2 kilometers between these historic adits. We've sampled across surface. We've also opened up the adits. We've sampled underground. We are seeing exceptional grade, up to 18% light rare earths. Again, a good majority of that, the majority of the economics being praseodymium and neodymium, but also a good amount of gallium in there. So the idea is we really want to get a better, we know we have grade. We know we have, broadly disseminated rare earth mineralization. Right now, it's really a matter of, wrapping around, a geologic model to that. And so the idea is that we're going to be going out there. We're going to have geophysics results coming out to get a good idea of, kind of the structural elements of the property. We're going to do more mapping, sampling, and really refine those targets and look to really see where this, rare earth mineralization converges, and really looking for a buried type deposit of significant scale. We have all the right elements there for significant discovery. Now it's really a matter of refining that, getting the permitting done, and we'll look to ultimately drill that asset next year. But it's exploration season right now in the south of Montana, so we're hitting that full stream ahead, and we'll have some good news to share with everyone about that asset as we move it along.
Okay, super. Do you have maybe already historical records about metallurgy from the rare earth elements? Because I think the most important thing is really to get those elements out of the rock, right?
That's right, and we're working on a flow sheet for that. It's certainly been quite positive that the U.S. government, you mentioned the IRA a moment ago, is really looking at these commodities and looking at, okay, well, what solutions do we have to really create a better domestic profile for the actual sourcing of these commodities. We're working with the U.S. Army Research Lab through Montana Tech. They're looking at these kind of things that you're talking about. Some other groups as well that we're speaking with in the U.S. about defining a flow sheet and getting down the number of steps to actually extract the commodities. So we are on that. The processing is obviously paramount for these commodities. The interesting thing on the IRA, though, interesting again, you bring it up. The IRA has been really focused. A lot of the funds that I've seen flow, I follow it quite carefully, to really more kind of late stage development construction type activities, as opposed to what we would consider pure exploration in the mining life cycle. So really focused on making discoveries. And that is, understandable. I mean, it's a lot of capital they have to deploy. They want to know, economics, viability, timing to market, and that's, where they're going to put in their capital. But as we both know, you ultimately have to build a pipeline of, exploration projects and discovery to have a sustainable source. So it's not really come down to the exploration point, the IRA, but certainly we could benefit from that in future. I think what the U.S. would be particularly well advised to do is similar to what Canada has done with flow through financing and things like that. So tax advantaged investments into the exploration of critical metals within the U.S. I think that would be a big step forward for them addressing the pipeline issue. The only real example of that actually I have, though, where they've actually started funding exploration. It's a commissioned mine, but is Jervois Global, which is right next to our cobalt asset in Idaho, in the Idaho Cobalt Belt. One of the few places, if not the only place, where you can find cobalt as a primary metal within a deposit in the U.S. So Jervois is right next to us. The U.S. government's put up about $15 million for them to, build out their resources, reserves, ultimately expand their mine life. But it'd be nice to see more IRA type funds or tax incentive type investments really being targeted to the exploration of the assets. That's ultimately, again, where the rubber hits the road is, we need discoveries in order to, feed future production. And that's, and I'm going on here a little bit, but that's really the issue that we've had in mining and commodities, is this lack of investment over the last, call it 10, 12 years, where we need new discoveries. And other countries, specifically we're talking China in this case, have been full steam ahead. So while we've been, saying, oh, kind of not in my backyard, or, this sector's out of favor, we haven't been investing, that hasn't held the Chinese back. They've been full steam ahead, and now they control the markets, and we're playing catch up.
Absolutely. Yeah, definitely. Yeah, that leads to my next question. If we look at the rare earth elements altogether, it looks to me like that supply demand is already out of balance. Yeah, especially we are now 2023. I think demand is already higher than the worldwide supply. Where do you see special shortages in which metals, or is it more like an overall problem?
Well, it's certainly an overall problem, but specifically the gallium, neodymium, praseodymium. I mean, these are the lifeblood of industries, and they're in short supply. Particularly, again, the gallium. The U.S. is not carrying any strategic reserve stockpile or anything like that. Completely dependent on China. I mean, these commodities, if they're cut off, have the potential to bring industries to their knees. So I think, obviously not all rare earths are created equal. Those are the big ones that I'm particularly interested in. But, from a pure economics perspective, where you have tight supply and high demand, what happens to price? Price is obviously elevated. That's, just simple economics at the end of the day. But really what that translates to is, at the end of the day, increased economics for these projects in the form of NPVs, IRRs, everything like that. And when you start to see enhanced economics, capital follows. So I think we see good inflows of capital to rare earths. As this continues to play out, you're already starting to see more articles, and really this has been outside some pretty specific such as yourself, industry type participants outside very specific circles. This issue has been very much ignored by the mainstream media. And it's going to become more prevalent when industry starts to have real challenges. It also is an inflationary and consumer product concern. As the prices of the inputs go up, so do the prices of the ultimate end product. We're in an inflationary environment right now. Everybody's well aware of that. But these are the kind of things that fuel those issues as well, specifically constrained commodity markets and ultimately increasing end product costs for consumers.
Yeah, absolutely. I think the same problem we face already with the cobalt reserves worldwide, or if we look at supply demand, I think it's already also out of balance if I look only at the operational supply. Can you give us also some ideas to your Haynes cobalt project in Idaho, which is also, yeah, a very interesting state for mining and also in the US, of course. So what is the work program here for the next 6 months and what can we expect?
Yeah, we don't have, we own 100% of the asset. It's in the Idaho
Hmm.
Cobalt Belt, right on the geologic trend from Jervois, which is a fully commissioned mine. They actually have that on care and maintenance right now, as they're looking for cobalt prices to improve and ultimately get better economics for what they're mining. But we're right on geologic trend. We have similar grade that we sampled at surface to what they've put the reserves and resources together on, and we have the majority of the underground workings from what was historically a gold copper mine, but with a very high percentage of cobalt. When that was mined, they didn't have use for the cobalt. But we have a good mix of reason to believe that we have a very important piece of the overall regional puzzle. Where this is again a very unique place within the U.S. because cobalt's actually a primary metal within the deposit. It's not a different type of mine that's window dressing as a cobalt mine. You can actually legitimately call it a cobalt mine. The work plan that we have is going to be light on Idaho. We're focused on drilling the lithium. We're focused on the rare earths. This is really an option over time on cobalt and the activities of Jervois, our neighbors. So, we have some permitting work to do there, some geophysics, some sampling, and the question will be whether we drill this asset on our own or not at some point. But it's a nice option. It's a good part of the portfolio, and reason why we've taken a portfolio approach, as we've discussed in the past, is it really gives us that optionality and flexibility to address the commodities where we're gonna, presumably create the most value for our shareholders.
Okay, super. Yeah, so I would say a lot is going on, a lot is coming up, lots of news. When will the next news, or let's say the news flow, will start approximately?
Well, it's certainly a bit of a backlog here. We have some definite information to share on our rare earth asset. That'll be geophysics. That'll be streamsed samplings. We're putting additional acreage in play there as well. So we're going to have details of that come out over time. The other big one is, of course, the drilling on our Nevada asset, rig on site. We'll put out photos of the initial core when we have it and send it to the lab. And then obviously a series of results there as we come out with what those assays look like over the fall. And then, you know, perhaps give some guidance on, what the next steps are there in context of what we were talking about with resources and the like. So we'll have a good solid chain of news flow here over the summer and fall. Um, Canadian summer, it's been a little lighter on volumes than it would be other parts of the year, as we've seen in the past. But our idea is, we do the good work that we need to do during the exploration season here. We line ourselves up well for the fall with a good string of news flow leading into the holiday season. So it's going to be
Super.
it's going to be a super push for us, a really big push for us coming into the fall. I'm excited.
Okay, super. I'm excited then too. As I said, I'm a shareholder, and a push, that's really what we need for those markets.
You work hard. Sometimes the
Yeah.
best time to get things done are when the market's a little quiet, and you work like heck, and you come out with the news at the right timing, and it's just the perfect storm. So that's what we're lining ourselves up for. And it's no secret, things have again been a little bit soft here for lithium over the last while, but I think that's going to come back with a vengeance here as we start seeing more news as we have out of China.
Absolutely. Super. Darren, thank you very much for the update. I highly appreciate it. And I would say, please hit the drill and please us with very good news over the next months. Thank you very much. Yeah, ladies and gentlemen, that was Darren Collins, the CEO of US Critical Metals, and you heard it. The drills are turning for the lithium, but also they have very, very interesting rare earth elements project and also cobalt, and all is in the US, and the US really are desperate for those metals. As you heard, China will restrict a lot, and lots of companies also in the US will get in trouble sooner than later. And I think this is the right strategy to really find that materials and find those metals in the US and really make sure that it will be produced there. So check it out, check out USCM. Thanks for watching us, and bye bye from Switzerland.